welcome to my live trading session. Okay. Today is April 29, 2025. Okay. My voice is a bit groggy cause of allergies. So I'm on the Euro USD pair. 1 minute time frame. Okay, so this is this is a short term trading. Okay. Alright, so let's get started. First, I'm going to zoom out the chart. Before I do that, right, I'm trading a small account. So my previous video I started with $20. Now we're down $6. Account balance is now $14.91. Right, so it seems as if some of the limit order that we said the market went through them, but I'm not concerned about that. Okay. Alright, so let's get started. I'm gonna zoom out my chart. Right, and I want to draw some lines on the highest point where the market been before. Right, just to use that as a reference. Right, just to use that as a reference to see where the market is going to move to. Okay, we already have some lines here, so yes, so the next thing, I'm gonna zoom up our chart. Alright, what we are looking for. We're looking for areas like this where the market leave a structure looking like this with strong bearish pressure to the downside, right, which is signaling that if the market come back to this area, chances are more sellers might be in this area to push the market down again. So we're gonna set a limit order right here, wait for the market to come back, see what happens. Okay, new order, market execution, pending order, sell limit. Okay, so our price is going to be 13,900. 13,900. Okay, stop loss. Going to put our stop loss probably right above this here, right here, right, which is 13,951. We're gonna go 10 pip above that, which is gonna be 13,961. 13,961. Okay, so I take profit. This is going to be 61 pip. So 1 to risk, 1 to 3 risk to reward ratio. If we lose 1, if we win, the market should pay us 3 times what we are risking. Okay, so 3 6 is 18, right? So approximately 183 pip profit. Okay, so 900 minus 183. Okay, roughly about 717. If my math is correct, about 717. Right, so that's how I take profit. Right, 3 times our risk, we're risking 61 pip. Right, the minus is 61 from our entry price, which is 13,900, 1.13900. Okay, so this cancel this 1.13, 1.13. So you just minus 900, 961 minus 900 leave us with 61 pip. Okay, so that's how we arrive at our take profit. Okay, so we're all set. Place order. Our lot size is a micro lot, 0.01 cent lot size. So for this, we are risking 61 cent to make $1.81. Okay, so trading a small account, place order. Okay, so we're set. Trading a small account, you don't want to risk any big amount, right? Because if you make a mistake, you don't have any wiggle room to wiggle in the market, right? One false move and your account is gone. So you have to use a small lot size and compound your account little by little. Okay. So we're gonna move back and up. See if we can find a area where price been before. Right, we are looking for structure where price been before, and this here I look like might be something right here, but I'm gonna be trading very carefully, right? I'm gonna be trading very carefully. I'm not taking any chances because this is a small account, right? So here is a structure, but the move to the downside is not a very strong enough sell pressure, and the market already pulled back into this area. So chances are, if the market come back to this area, it might work out, but I'm not taking any chances. Once there's a probability that the area is not gonna work, I'm not gonna trade it, right? Because you have to, this is a probability game. Okay, this is a game of probability. So once there's a possibility that a area is not gonna work out, then it doesn't make any sense put our money on the line. Have to trade very carefully. Okay, so this year I look like a year of interest, right? This year I look like a nice year of interest. Right, let me see what's going on. Okay, all right. So look at this year right here, right? Sellers, buyers push the market up, right? Sellers rejected the buyers with a strong bull bear engulfing candle, which swallowed up all this. So this is a high chance that when the market return to this area, more sellers are here waiting to wage war against the buyers. So this is what we are looking for when we are setting our limit order. We need high probability. Okay, we need high probability. Right, so I'm gonna set my order right here. Right here. 14,184. So I'm gonna go 4 pip, round it out to 14,180, 5 pip in front. So new order pending. Right. Sell limit, we are using limit order 0.01 cent lot size, micro lot. Our price is 14,180. 14,180. Okay, so our stop loss is gonna be 10 pip above the top of the wick, right? Because this is where sellers came in the market and pushed the market down, right? So 14,230. So our stop loss is gonna be 14,230. Okay, so our take profit is gonna be 230 minus 180. Okay, so we are risking 50 pip, right? So we want to make 150 pip, risking 50 pip to make 150 pip. So we are risking 50 cents to make $1.50. Okay, so 180 minus 150 equal 30. Right, so our take profit is 14,030. Okay, 14,030. So this trade is set. Okay, alright, so moving on again to our next level, right, which is all the way above up here. So I'm not seeing any point of interest, so I'm gonna go forward, see what's going on. Okay, so I wanna look below this area. To see if there's any point of interest for buy opportunity below this price point right here, 13,737. So I wanna see if we can find any buy opportunity below 13,337. Okay. Gonna zoom up our chart. So this here right here is a area where buyers came in the market with strong buy pressure. Okay, pushing the market up. So this is the area where the market is currently targeting, right? So the fact that sellers already came back into this area, we're not gonna take any trade here. Okay, but however, remember this point here where in our last video we have a order pending right here. Okay, so this here right here look like a area of interest. All right, let me see. right here is a year of interest. Okay, buyers push the market up, creating a structure right here, pushing the market up, a strong bull candle. So I want to take a buy limit right here. Okay, so our entry price is gonna be right here at the open of this candle, 10 pip above, which is 13,654. New order, pending order, buy limit 0.01 cent micro lot, right? 13,654. 654 or stop right below the week of this year right here, 10 pip below, so 13,619. Stop loss 13,619. Okay, so I take profit is gonna be 3 times what we are risking. So in order to find out what we are risking, right, your minus stop loss from the entry price, which is 619 minus 654. So 19 and 1, 20. Okay, 34 and 1, 35. So we're risking 35 pip, right, to make 75 pip. Okay, so we're risking 35 cents in order to make 75 cents. Okay, but I'm gonna be a little bit more greedy, right? So I'm gonna risk 35 pip to make 100 pip. So I'm risking 35 cents to make $1. Okay, so profit is gonna be 100 pip, which is making it 754. So profit 754. Right, so I just run it off to, instead of 75 pip, just run it off to 100 pip, making it $1. Right, the more profit, the faster your account will grow. Right, so we're risking 35 cents to make $1, which is roughly about 1 to 4 risk to reward ratio. Right, place. Okay, that trade is set. Right, this trade is set. So we're gonna look further below this area to see if we see any point of interest where we can trade from. Okay, this area is a area buyers came in the market, pushing the market up. Sellers try to push the market down but couldn't make it all the way to here, which is a strong indication that buy pressure might still be in this area, right? Because sellers wasn't able to push the market down all the way down. Okay, so smooth and easy trading, right? So I'm trading the New York Open, New York session, right? Reason being, all the big money guys in the market, they are at the New York Stock Exchange, which will be open around 9 o'clock. So I like to be ready with my orders and waiting for them to come in the market and spend all those big money moving the market in my favor. Okay, so I like to start 1 hour before the New York Open and trade 1 hour into the New York Open. So I'm starting 8 a.m. in the morning, trading to 10 a.m. in the morning, the New York Open at 9 a.m. in the morning. Right, so at approximately 10 a.m. I'm finished trading. Right, so I'm not trading all day. If I want, I can trade all the way all the way until 3 p.m. when the New York close, right? Because once you're trading a strategy that is at least 50% win rate, it doesn't matter what market condition you're in, even if it's the Asian session, it doesn't matter the condition of the market, as long as you can be able to identify trading opportunity. Doesn't matter what time of the day it is, it doesn't matter, right? Doesn't really matter, to be honest, right? But trading is a probability game, okay? Trading is a probability game. So what you have to do, you have to tip the scale in your favor as much as possible, right? So you need to be trading in market condition where high liquidity is generated, right? Which will make the probability of your trade working out greater, right? Once the market is moving, right, you have a high chance of your trade working out than if the market is sitting still or trading sideways. Okay. So this here right here, we already have a buy limit right here. We have a buy limit right here. Right, so we're gonna look below this here, see if we can find anything below here, which is 13,353. Zoom out. Look below 13,353. See if we find any opportunity. Excuse me. So I wanna look at this here right here, see what's going on. Right. Sellers push down the market right here. Buyers rejected them, pushing the market all the way up to Choco, all the way up to yonder. Right, so we zoom up and explain what's going on. So same strategy, same principle. Right, I'm not doing anything different. Same thing over and over all day, every day until we're in profit and in front of the market. Okay. So right here at this price point, buyers stepped in the market, creating a structure with a strong bull candle, pushing the market up. Sellers tried to push the market down and couldn't push the market down with what they would call a retest of this era, right? Wasn't able to penetrate all the way up to this era, so just bounce at the top of this era right here. So chances are more buyers are in this era, right? When the market come back, chances are it might be able to push the market up, hopefully just enough to give us a 1 to 3 risk to reward, putting us in profit. So we're gonna take a trade right here. If the trade win, I don't know. If the trade lose, I don't know. There's no way for me to tell, right? But what I'm doing is using what the market is giving me, the data that the market is showing me, using the known to find the unknown, right? What is given is that sellers push the market to this price point, 13,216, and was rejected strongly by buyers, creating a structure with a strong bull engulfing candle, swallowing up all this seller right here, right, which is a sign that strong buy pressure is in this area. So chances are if the market return to this area, we might get a push to the upside again, okay? Because the market always repeat itself over and over. It's just for you to quantify your structure to trade from. Okay, so we're gonna set a buy limit 13,247. New order, market execution, pending order, buy limit, volume 0.01 microlot, entry price 13,247 is our entry price. 13,247. Stop loss 10 bit below, which is 13,206. 13,206. Stop loss 13,206. Okay, our take profit is gonna be entry price minus stop loss. That is how you calculate your take profit. Entry price minus stop loss, right? 7 minus 1 minus 6, 1. Bring down the 4, right? 2 minus 2, everything cancel each other out. So we're risking 41 pip, which is equal to 41 cents because it's a 0.01 cent lot size we're using. Each pip is gonna be 1 cent. You multiply the risk by the lot size, which is 0.01 cent lot. 41 cent minus 1 cent equal 41 cent risk. So we're risking 41 cent, right? 3 fourths 12 to make $1.23. Okay, so 123 pip will be our profit. Okay, so in order to get the profit price, we're adding 123 to the entry price, right? This is 10, right? Bring the 1 5, right? So this is gonna be 370. So 370 is gonna be our profit price, right? 370. 1.370. Okay, 1.3370. Okay, all right, so that is done for now. So what we are gonna do, we're gonna go back to the action, right? Watch what the market is doing. Okay, so as you can see, the market was rejected, right at this price point right here. Market came into this area. Explain what's going on there. Market came back to this area right here, right? See, I'm showing you what's going on, right? Maybe we're behind in the market right now. We're behind in the market right now, but I'm showing you that this strategy, ultimately, once you use it and use it well, you can be profitable. Look what happened. Okay, I'm gonna show you what happened. This is where the market came. This is the last price point where the market came. Okay, right. So I'm gonna draw a line on this price point right here. Color the line to show you what's going on, to explain to you how the market work. So we're gonna use a yellow line. Okay, so the price point where the market came is 1.13700. Okay, 1.13700. So watch what's going on now. I zoom out. See, this is where the market came. Okay, right. So look what happened. This was already a era where sellers was in control of the market. Market pushed down, sellers was in control, right? Market came back into this era. Sellers pushed the market down again, right? Buyers came in the market, intersecting the era where sellers was in control 2 times, right? So this would be a prior resistant era, right? So right at this price point where price intersect where sellers was already in the market, now buyers take control of this area, push the market all the way up to here, right? Then sellers came back into this area 1 time before, collecting, try to fight off the buyers. Buyers rejected them again, pushing the market all the way up. Now look at the price. I'm showing you that this work. You just have to be able to find the right areas to trade from, okay? And be able to do it efficiently over and over, and you will be in profit. Look, right? This is the area, right? This is the price point. Sellers came into the market, pushed the market down to here, 13,710, right? Push the market all the way up, right? All the way up. Look how far the market went. All the way up to this price, 14,250, 13,710, 300, 250, approximately 750 pip. See how far the market move, and this is a 1 minute time frame. See how much profit. If it was playing greedy, see how much profit. See how far the market went before coming back again. Look, this is the era, right? See how far the market push from this era, 700 pip. Okay, so these eras will give you a big move in the market. This is a 1 minute time frame. Okay, 700 pips, approximately 750 pip, right, before coming back. Look, see? So I'm not asking you if this strategy work. I'm telling you, once you're able to use it efficiently, you have to be patient. Trading is about being patient, right? Trading over and over, trading the same strategy over and over, constantly until you're in front of the market. See? Right, the market came down. Right, I'm gonna show you. Look, let me zoom out, scrunch the chart all the way out and show you what's going on. Look, see? Let me put a trend line to show you. I'm not kidding. Right? Don't be fooled by these people on YouTube flashing you using $10 account to make 1,400, using $10 account to make 2,000. Right? Yes, you can do it, but it's not consistent. A lot of these people, they are not showing you the truth on YouTube. They're not showing you and telling you what is real trading like. Right? You have to be patient. It takes time to generate wealth. If you know about Warren Buffett, right? Warren Buffett generated his wealth from he was around 10 years old, right? So research Warren Buffett and Check how much. I'm sure Warren Buffett is more than 70 years old right now. So Warren Buffett is generating his wealth, compounding his wealth well over 70 years now before I was born. Right? I'm 43 years old. Right? And Warren Buffett is generating his wealth long before I was born. So it's same thing with currency trading. You have to be patient. You have to compound your money. Right? Using the same strategy over and over again until you're in front of the market and in profit, compounding, right? So look what happened. This is the era right here. See? This is the era right here, right? Sellers was in control, right? Buyers push the market all the way up to this price point, right? Look where the cursor is pointing right here. Look right here, right? Sellers sell the market down again into this era. Buyers rejected them, right? See? This is where the market intersect. Look. This is the intersection point right here. Look. Right there is the intersection. Right? Look. See? Right here. Right? Market went up all the way up to this price point right here. Let me use a trend line to show what's going on. Right from the intersection point all the way up to this price point. Right? And then sellers push the market down from this price point. Right? All the way down to this price point again. Right? Coming back, look, it form a triangle, look, see? All the way back into this era, look, see? I'm not kidding, all the way up to here, 750 pip, right? I use this method all the while to win trade well over 250 pip, right? Some of my biggest win in the market, 250 pip trade. And this is what I do in order to catch those moves, 250 pip, right? My biggest win, 1800 pip, 250, 2500 pip, 1800 pip, 1000 pip, right? This is what I do, right? So from this price point to this price point, right? 750 pip. This is what I do, but the only difference when I'm doing those kind of trading, I use a 4-hour time frame, the bigger time frame to find the bigger move, right? So I'm not bullshitting you guys. I'm showing you the real trading. Yeah, people will charge you a lot of money for this information, right? So I'm showing you, right, real trading. This is no bullshit trading where people is flashing money and flashing Lamborghini in front of your face. A lot of that shit is fake, right? A lot of that shit is fake. I'm showing you the real trading, right? Real trading where banks and institutions are doing, right? This is what they do. They buy from structure to structure, right? Qualified structure to structure, right? So with that being said, the market always repeats itself over and over. You have to just be able to identify the areas. Look at this right here. Look at this price point right here. Market came here, right? Sellers sell the market down to here. Buyers push the market up. Okay. Sellers came back to this area, right? Right here. Push the market all the way up. So it always repeats itself, right? Look right here again. Same thing right here again. So if you scroll to your chart, right through the chart, you're gonna see the same thing happening over and over because the market always repeats itself from buyers to sellers, sellers to buyers, right? You have to be able to quantify the areas, right? Where buyers and sellers intersect each other, right? Quantify your zones, your structure, and just trade until you're good at it. Then you'll be able to make money. Okay. right? So this is a era right here. Sellers was in control of the market right here, right? Buyers and sellers intersect each other right here. Right? So this era is a year of interest as well. So if you realize what's happening, sellers try to come back to this era and wasn't able to come back to this structure right here. Right? So I'm gonna do some calculation to see if this would be a profitable era to trade from. Okay. So 13,835 stop loss would be around 13,800, so 35 pip. So our profit would be 100 pips. So let's see if from entry to where the market is right now, if it is 100 pip. So 835 to 900, 919. Wanted to go to at least 3 times before we decide we want to take a trade right here. 917 wanted to go to 100 pips, so waiting on the market to take it up to 935. So it was 924. So wanted to go up at least 10 more pip. Then that would qualify this zone right here. And the fact that the market break through this year as well will also qualify this zone as a strong year of interest. The fact that the market was able to create another structure up here, break above it again, right? So 2 confirmation we are waiting on the market to just push up some more. We already have 1 confirmation. The market already break through this area, creating a structure right here as well. But we're not gonna trade from this structure until the market move away at least 3 times. Okay, so I want the market to push up 10 more pip, then we can enter set this trade. Okay, so 5 more. Come on, 5 more pip, 2 more pip, 2 more pip up. Got it. So the market went up to 41. Right, so from here to all the way up here. Okay, so we're good with this trade. Right, this trade right here now. So we're gonna set this order. Right, buy new order, pending order, buy limit. Right, price right here, and the tip 13,845. 13,845 to 13. Right, 10 bit below 13,7, 13,795, 10,790, 13,790. We already calculated on the chart already, so we're gonna take our profit about 13,992. Okay, 13,992. 13,992. Please. Okay. All right. Let me see here. Let me see what's going on here. This here right here is a year of interest as well, cause market break above this era. where sellers was in control farming this year right here, two structure. But we have to calculate, we want the market to move away at least 3 times to qualify this as a profitable trading structure. We want the market to move away 3 times before we decide to trade this year right here. So let's see. 13,924 to 13,886. 3,924 7. So it's about 27 pip. About 27 pip. So 10 pip above this would be 37. 10 pip below. Overall, we'll be risking about 47 pip. 3, 4, 12. 3, 4, 12. 3, 7, 21. So about 141 pip from this point. 141 would be 14,000. 14,665. So let's see if the market reach 14,600. 14,065. Let's see. Market reach 14,046. So we need about 5, 11, 6. About 25 pip more. Yeah, we need about 25 pip more to qualify this year as a trading opportunity. We need 25 more pip to the upside. So let's wait and see if the market will push up 25 more pip. Okay. Hope you guys are enjoying my session, my live session. This is real trading, right? So you have to be patient. Trading is about patience, doing the same thing over and over, win or lose until you're profitable. Okay. You have to be able to quantify the era where buyers are in control of the market and sellers are in control of the market, right? That will give you a high probability that when the market return, it will give you a push to the upside or downside. Okay, so it's all about probability, doing the same thing over and over, win or lose, right? As the account grow, what we are gonna do is increase our lot size to become more profitable in short succession. So when the account reach $40, we start to use 0.2 cent lot size. So the account will compound and start to grow more. Right? So when the account start to compound, we increase our lot size. Each time the account size double, we increase our lot size by 1. Right? And then when the account is big enough, we start to use a percentage risk, which is 2% of our account balance per trade. No more than 2% of the account balance per trade. We can't use a percentage value right now because the account is too small. So we have to be just using smallest amount of risk per trade, trading the strategy. So it is now 8:50 a.m. Right? 10 more minutes before the New York Stock Exchange open, right? Ten more minutes before the New York Stock Exchange open. So when the New York Stock Exchange open, right, there should be a lot of liquidity in the market because all those Wall Street traders are gonna be on the trading floor, trading all the currency pair, right? So, and this is like a crossroad between the London session and the New York session. So a lot of activity always take place, right, within the first half of the New York Open. A lot of the big move in the market always take place the first half of the New York session. So here we are waiting on the market to push up about 25 more pip in order to qualify this era right here as a opportunity. Right, so we are trading by rules, strict rules today. We are not jumping the gun. We're just using strict trading rules and principles to quantify our trading opportunity. Right, so I'm just showing you what I'm doing as I go along. This information, people will charge you big bucks for this information that I'm giving you for free. So if you find value in my video, just subscribe to the channel, click the like button, share this video, right, with someone who you think might benefit from this knowledge. Okay, so sellers was in control of this area, right? Buyers push the market through this area, intersecting right here. Okay, right here, there's an intersection between sellers and buyers. So because this was already a strong sell here, buyers take it over. Chances are buyers are now in control of this area right here. So when the market come back to this area, if the theory is right, buyers should push the market to the upside again. If there is strong buyers still in this area, okay? So we are using the known to find the unknown, right? There's no way for us to know 100% if buyers are in this area. No trader on God green earth can know 100% what the market is gonna do, right? What you can do, given the market data, you can analyze the market data, right? Use what is given to you in the price action, right, to find out if it is a high chance of buyers buying in this area when the market come back to this area or not, right? So all you can do to control this, if we qualify this area, we put our money on the line, right? Risking 1 to make 3. If we are right, the market pay us 3 times what we are risking. If we are wrong, we lose 1. That's the only thing we can do. So I don't care if I lose, I just move on to the next trading opportunity. If I win, the market pay me 3 times what I'm risking. So once I put the trade in the market, I don't care what happen afterward. I just leave it. I'm not gonna cash it out before time, nothing, just leave it, right? Because that's what is gonna put you in front of the market, right? So we got our confirmation, the market move up 3 times, 20 more pip, right? So we're gonna take this trade. We're gonna set our next buy limit. We have to do it quick before the market come back down. right? Pending order 0.01 cent lot. Always check your lot size, right? So we're gonna buy right here, 10 pip above, which is 13,933. 13,933. 13,933. Okay. With a stop loss 10 pip below this here, right here, which is 13,876. 13,876. Now the reason why we do that is because of the spread. Remember that when you're using a broker with a floating spread, right? What they'll do is you have to pay a spread, right? You have to pay a spread, right? Between bid and ask is the spread, right? So that's how the broker make their money, right? They increase the spread in order to make their money. So when the market come back to this area, you want to give the market a 10 pip buffer on the spread so that if the market widen, you don't get stopped out of the trade with the spread. Okay, so our take profit would be somewhere around here, about 14,054. So we're gonna put in that price because we already calculated it. 14,054. We already do the calculation, so we can just put in the coordinates and place. So this trade is set, right? So just continue to do the same thing. Excuse me. So we're gonna continue to do the same thing, right? Until the market stop showing us trading opportunities. So this is a year as well of interest. Market came into this. Sellers was in control right here, pushing the market down. So this is where the market is now trending up, right? Trend traders would say this is trending, right? I'm showing you as we go along, right? Market is forming a small trend from this here all the way up to here, right? The market is in a small bull trend, okay? Small bull trend to the upside. This point all the way up to this point, right? The market is in a small bull trend. We're not trend trading, right? All we're doing is using the known to find the unknown, but it will fall into trend trading, support and resistance, all that, right? So to show that the strategy is effective, you're trading the trend without trading the trend. You're trading support and resistance without trading support and resistance. That's how effective this strategy is. You're pretty much trading 3 strategies in one without even knowing it, right? You're trading 3 strategies in one without even knowing it, right? So this will eventually identify the trend automatically. This strategy will identify the support and resistance area automatically. Okay, right? So let me remove these lines because I'm not doing trend trading, but I'm just showing you that using this strategy, it will automatically put you in the trend. It will automatically find the support and resistance areas So this is a very powerful strategy. Look, see, market came into this era, right? And is gaining resistance to the upside, right? Because of the trend. If we were trend trading, we wouldn't wait for anything else. We're just buying right here because it's showing us that the market is trending, right? We just buy right here. If we were doing trend trading, we wouldn't wait for anything else. We just click buy, right? But with this strategy, it will protect you against unnecessary losses because you click buy, right? You don't know if there's profit to the upside or if there is resistance to the upside, which is going to turn the market around, right? So you're going to just jump and click buy without knowing if there's profit to the upside or downside. So using this strategy to prevent you from unnecessary loss as well, right? So we're going to wait for the market to push up, right? Wait for the market to push up. But this era, the market already collected, come back to this era. So this is a no trade for us. We're not interested to trade this anymore because the market come back to this era without pushing 3 times to the upside, right? So 3 times to the upside would be our profit margin. So we don't have a profit margin anymore because the market only maybe move probably 1 time to the upside and then come back. So we don't have a profit to the upside anymore. So this is a no trade. So you see, this strategy is very powerful. Protect you from losses. Protect you from going into the wrong trades. Okay. So see, market push down all the way through this era. Right? Market push through this era. Right? Because there was no profit. There is no significant profit to the upside from this zone. So the market come back and push through this era, right? Right. So all we have to do is wait, watch and wait for the market to create more opportunity. Right. Watch and wait for it to create more opportunity. We are not rushing. We are just doing the same thing over and over, win or lose. Right. Wait patiently for the opportunities to present themselves. Right. Trading is about patience. So it's now 9:03 a.m. in New York. Stock exchange should be open around 9 a.m. or 9:30 a.m. Right. So we have 1 more hour to go. When it reach 10 o'clock, this session will be over. Right. So that's the beauty about limit order. Right. Even when my trading session is over, my limit orders are gonna be in the market waiting for the market to come back. So even when I'm asleep, my trades are working while I'm sleeping. Right? So I always leave my orders overnight, leave them until the market come back. Right? If I know when the market come back to them, even if I'm in my sleep, if I'm working, doing a 9 to 5 job, just use limit orders, buy and sell limit. You can go to work. When you come home from work in the evening, you can seek out the opportunities, set your buy and sell limit, leave them, and go to work in the morning, come home in the evening, and do the same thing over and over again. You don't have to trade any specific session. All you have to do is just analyze your chart, look for the opportunities, and then you set your buy or your sell limit. So waiting patiently for the market to present some more opportunity. Okay, my voice is a bit distorted because my sinus allergy is affected, so excuse my voice for today. But I wanted to follow up on another live session this morning, so I'm gonna try to do as much of these live session trading this same account. Started with $20. Show you guys that if you know how to manage your account and how to properly manage your risk using a strategy over and over constantly, right, it can be proven effectively over time. You can grow your account over time, right? Trading is not about coming in the market today and become a multi-billionaire tomorrow. It's not gonna work, right? It's not gonna work. You're gonna blow up your account if you don't manage your risk, manage your account properly. You're gonna blow up your account, right? So this is how you use small risk to make big profit in the market. Okay, this is how you use small risk to make big profit in the market, right? If you can master this strategy, right, with a sizable account of, say, for example, $1,000 account, right? You can risk with one trade with a standard lot of $1, right? You can risk $50 to make $100 or $50 to make $300 or $50 to make $250. It all depends on what you decide to your reward to be, because all your reward is if you need more profit in the market, the further away from the structure the market move is your profit, if it is your profit margin. So for this trade, if I want 1 to 5, all I have to do is wait for the market to move away at least 5 times my risk, which is here, right? Calculate the movement from here, wait for the market to move away 5 times, then you use that as your profit margin. Okay. Now we have an opportunity presenting itself right here. Was a sell buy here where the market intersect right here. The market intersect this trend line. Move this trend line. We are not trend trading. So you see the difference with trend trading and this strategy. With trend trading, there's no there's no, you're pretty much, you're trading blindfolded, right? You're trading blindfolded, right? But with this strategy, you're trading the trend, but this strategy protect you from potential losing trade, right? By calculating the profit margin as well, right? From your structure, protect you from possible losing trade. So if we were trading trend, this would be a losing trade for us, right? Because in trend trading, this would be a buy signal. I would have buy the market and see the market came reverse through this area, right? Which the trend is still intact because it didn't break through this area right here. So we could have still using trend trading, we could have still taken a buy right here as well. But we are not trading trend, right? So this would have been a loss for us if we were trading trend, right? Now this area was a area of interest, but we are not interested in this area anymore because the market didn't move away 3 times what we were expecting to profit. 3 times our risk. Market didn't move away 3 times. So as a result of that, this is a no trade. Right, right, it's a no trade because the market didn't move away 3 times. So we're just waiting for more trading opportunity to present itself. Okay, right, so waiting patiently for more trading opportunity to present itself. So you see the beauty about this strategy, protect you from getting into losing position, right? The fact that the market did move away in profit 3 times this era where sellers and buyers intersect each other, right? It didn't qualify as a trading opportunity for us, right? Now, if I wanted to trade this era, I could have, right? I could have. Let me show you why. The fact that this era right here, right? The fact that this era right here was the last era where buyers was in control of the market, right? The fact that this era was the last era where buyers was in control of the market, right? Yeah. This era was the last era where buyers was in control of the market. Okay, right? So from here to here, buyers was in control of the market all the way from here to here, right? But so the fact that this breakthrough this year right here, I could have traded from here to here, which would be 14,048, 14, about 40 pip in between where the market intersect to where buyers are, right? Now look at the downside to this. We would have a profit of 40 pip, but a risk of 48, 98. So we would be risking 50 pip in order to make 40 pip, which in no trading strategy that make any sense. You can't risk more to make less. You have to risk less to make more. So that's the reason why I didn't trade it, right? And it's the same reason why I didn't trade these here right here, because it didn't reach our profitability that we're looking for. Okay. Excuse me. So we're still waiting on the market to present new opportunity to us. Waiting on the market to present new opportunities. Yeah, so excuse me. So you have to be patient, right? Trading this strategy. You have to be very patient. Right. Right, very patient. Wait for the market to present new opportunities. So if there's no opportunity, stay out the market. Right. No trade. Right. If there's no clear opportunity, then no trade. So the market break above this here right here, forming some structure. But if you realize there's not any strong push to the upside, right? Some small candles are forming, which is a sign that the buy pressure is weakening. So you have to be able to tell what's going on in the market. Look at this strong bull candle right here. Strong bull pressure right here. Then another one. Right. Then the bullish pressure start to weaken, forming a hammer. This is a hammer candle, which if you're trading candlestick pattern or whatever they call it, this is a sign that the market want to go down. But I'm not trading none of that stuff. None of that stuff is important. But sometimes you can use it for reference to know what's going on in the market. If you can read the candles, they can give you information as to what is going on in the market. Right? This is a sign that the market may go down. This right here is a bearish engulfing candle, which is another sign that there's a possibility that the market might push down. But I don't trade candles sign doji, and no, I don't trade those stuff because it is not important. It's not important. If you trade that stuff, you may win sometime, but you're gonna lose a lot of time. Trust me. I can trade it if I want, but I'm not trading that stuff. Right? All you have to focus on is the buyers and sellers in the market. Buyers and sellers are what control the market. Once you can master who is in control of the market and where there's strong buy pressure in the market, strong sell pressure, look to take your trade when the market come back. Then you're good to go. All right. So we're still not looking any opportunity because the market failed to break above this era with a high succession. So we're not looking any trading opportunity. But as I said before, see, if I wanted, I could have traded this because I had two confirmation using just by reading the candles that sellers was coming into the market, and the market, there's a possibility that the market is trying to go down. See, so said, so done. Market went down. But I'm not trading using candlestick pattern or candlestick formation. If I want, I can trade it. I know to trade it. I know it. I know how to read the candles, candle by candle. I can read the market candle by candle and tell you what every single candle is doing. So if I want, I can trade candlestick formation, but that's not the strategy that I'm trading. Maybe I'll do a video on candlestick formation, post on my channel, do a live session trading candlestick formation, right? Just for the fun of it, see how profitable it will be. I might do a live session trading candlestick formation, right? So you look at it, market went down to this era where there was strong bullish pressure in this era. But the reason why we weren't interested in this era is because the market didn't move away 3 times this era. Okay. So even if this trade win, right, there's always gonna be another trade and another trade and another trade and another trade, right? Because the market will always move in the same way. If you zoom out your chart in order to get the market data, and if you scroll your chart all the way back, let me see how far this chart go back. I can show you, right? Let me see how far. I can show you that the market will always act in the same way. Market movement doesn't change, right? I can go all the way back, right, to the end of this chart, the market. So we don't have any more data, right? So if you look at the date down here where I'm pointing to, look where I'm pointing, 22nd of January 2025. We're in April 2025, and look, let me show you, look at the chart, right? See, right here. Let me zoom up a little bit. Let me zoom up so that you can see what's going on. Let me show you, right? See, January 22nd, 2025. Buyers was in control right here. Break, sellers took over. Buyers come back, right? Market go down, right? Same thing here. Sellers in control, break, intersect, push up, market come back, market go up. The same thing will happen over and over. Look, see, buyers was in control. Sellers sell the market down, intersect, market come back, market went down, right? Same thing will repeat itself over and over, right? Same thing will always repeat itself. We zoom out, show you, see, same thing will happen over and over. Look, intersect, market went down, come back, further down, see? Same thing will happen over and over in the market. Right? You just have to know what to look for, be able to quantify. See? Same thing happen right here. Look, break, intersect right here. Market come back, market goes down. Same thing here, same thing here. And this is January 23. Look, sellers was in control, break, intersect, goes up, come back, right? Market goes up. Same thing here. See? And if we go all the way through the chart, you're gonna see the same thing here. Look, we go all the way through the chart here. You're gonna see the same thing. Same thing you're gonna see happening over and over all the way right through the chart. You're gonna see the same thing happening over and over. Right? You just have to be patient, be able to quantify your trades. Right? Be able to quantify your trades and be patient, okay? Right? You have to be patient, learn to quantify your trades. So you see, if we had jump in right at this price point, right, this would have been a losing trade. See, market is still going down, right? And I'm expecting the market to come back all the way down to here, where buyers was in control, right? Push the market. Either they're gonna push it back up, or sellers are gonna break through this area to go further down. Okay, so wait and see. We're still waiting patiently for the market to show us our next trade. So far, none of our orders, were triggered so far. So we're not in a rush, right? Because there are limit orders. So even when this session is over and the market continue to move, those orders may be triggered at a later date. So that's why we use limit orders. Buy and sell limit. Okay. So let's see if any of our orders are gonna be triggered before this session is over. This year look like a year of interest. Strong bull candle right in this era, but this era is a pullback into this era, right? But in order for this to qualify for us, the market have to break and move away from this structure, right? In order to qualify for this to qualify, right? The reason why this is a year of interest is because the market is having a hard time coming back into this era, right? So that is a signal that a lot of buyers are in this era because the market is having a hard time coming back into this era right here. And as you can see, market come back, strong bull candle fired up out of this era, right? Strong bull candle, right? Fired up from this era, right? But in trading, you have to be patient, right? Don't rush the market. Be patient and wait for your trade to come, right? The fact that the market wasn't able to break above this era, right? And this era right here, I don't think the market moved away 3 times this era. So that's why we didn't take a trade right here. And the next thing is that this is actually a pullback into this era, right? So just gonna wait patiently for the next opportunity to present itself. Okay. So go on the highest probability on our side when we are taking a trade, right? We want the odds to be on our side. We don't want the odds to be against us. So we have to be very careful trading the financial market because it is very volatile and a lot of people trading the market don't make money. They say only 2% of persons trading the financial market actually make money. So in order to be in the 2%, you can't trade like the 98%. You have to trade like the 2%, right? Which is protecting your money, putting the odds in your favor, ensure that the odds are always in your favor, right? At all times, protect your capital, manage your risk, right? Don't risk more than your account size, more than 2% of your account balance, right? So remember, I'm trading a small account of $20, right? So by risking cents to make dollars, right? If I do a quick calculation, right, with $14, right, with $14, I have approximately 28 trade, 28 trade at 50 cents per trade. So I would have to lose 28 times consistently before this account is blown, right? Now, if your strategy is at least 50% win rate, right, you should not lose 28 times in a row, right? So that's the reason why you have to manage your account. If I was using a 0. If I was using a mini lot, which is 0.1 cent lot, right? 50 pip, 50 pip risk would be $5 with a with a with a micro lot. With a micro lot, 50 pip would be $5 off this account, right? So 4 losing trade on this account would be gone, right? So you have to be smart. I rather give myself 28 chances in the market than trying to chase making big money overnight, blowing up your account. So that's the secret to trading. You have to manage your account just like any other savings account. You have to manage your account, always put money in, try to grow your account, compound. Try to compound your account. Right. So, as you can see, what's going on in the market now, this year, as I said before, was a pullback of this year. Right? So you see how this strategy work, keep you from going into losing trade, right? Because the market wasn't able to break above this era up here, right? It disqualified taking any trades, right? So you see, with the candlestick formation that I was telling you about, if I was trading candlestick, I could have won this trade, right? From here, at least to this point, because the profitability was from here to here. Reason being, sellers took the market down from here to here. So trading candlestick, right? Your profit margin would be from here to the last point where sellers was in control of the market, right? And this would have been a winning trade, right? So it would have profited. This would be probably would have entered right here, 118 pip. Would have gotten out right here. So it would probably make about $1. would make about $1, right? And that trade would risk maybe about from here to here 123, 170, right? About 50 pip to make $1 1 to 2 risk. Not bad. This would have been a winning trade. Right, so maybe one of these days do a live session on candlestick price action trading. Right, so yeah, maybe one of these days I'll do that. But still nothing for us yet. Market is coming into one of our buy limit, which is right here. So let's see if the market is able to come back to this order and trigger our order before this session is over. See if we can get a winner right here. Let's see what happened. So the market needs to drop some more, come back into this era. But as you can see, this is a good sign. The market is having problems coming back into this era, which is an indication that when the market come back, we might have strong buy pressure in this era right here. We might have strong buy pressure in this era right here. Okay, so we have to wait patiently for the market to come down. Right, we are not taking any trade manually today, waiting on the market to come down to our order. So you have to be very patient and disciplined when trading. Okay, so market is coming down. Right, let's see what happens. All right, sellers are trying to push the market down and they're having resistance. Right, so this is a sign that our buy order that is right here, right, it might be strong enough buy pressure. Right, let's see how it works out. Okay, so our first order is triggered right here. So we're currently down. We're down some cent, 23 cent. We're down. So watch and see what's gonna happen. Right, if buyers are able to withstand the sell pressure, right, and move us into profit, right? So once the market go to 14,054, which is about right here, we should be in profit. Right about 14,054 right here. So we're in profit now. 10 cent in profit. 7 cent. Market is retracing. Right. 8 cent in profit. 2 cent in profit. Minus 1 cent. Right. Minus 1 cent. So Market is going up 20 cent in profit, 29 cent in profit, right? 25 cent in profit, 30 cent in profit. So all we have to do is just wait. 36 cent, 40 cent, 42 cent. All we have to do is just wait, right? But we're not doing anything. Wait for the market to play out. See what's gonna happen. 24 cent, 27 cent. Strong bull pressure coming in the market. Let's see if it will continue to withstand the sell pressure and bringing us into profit all the way up here. Right, this is where our profit target is. 1.14054. Right, let's see if we can have a winner before the trading session is up. Right, 20 cent in profit. So this is our first trade. So we only get one trade for this session. Let's hope it's a winning trade so that we can seal the day with a winner. It's almost time to close out this trading session. So we close out within the next 7 minutes. But I'm just gonna stick around to see how this trade play out before the session is over. So 36 cent in profit. Right. Market is pulling back a little bit. Let's see what's gonna happen. Still in profit, 0.25 cent. Right. Still in profit. So we're just waiting to see if more buyers are gonna step in, push the market to our profitability. All right. So still in profit, 21 cent. Market is retracing. Right. Buyers are trying to step in the market. Right. Buyers and sellers are at war right now. Let's see who is gonna win. Oh, we have some buy pressure coming into the market right now. As you can see, candle is blinking green to red, green to red. So this candle close red with an indecision candle, meaning that chances are, the market can continue in the direction where it is going. The fact that you have an indecision candle. So let's see. Buyers are stepping in. Sellers are holding at the moment. Buyers make a move to the upside. Sellers are resisting. Buyers are making another up move. Buyers are ramping up the pressure. Sellers are resisting. Buyers are making a up move again. Right? Sellers are resisting the buyers. Buyers close with a green candle. Sellers rejected to the downside. Buyers are resisting now. Sellers make a push to the downside. So sellers trying to make a move to the downside. Buyers are now resisting. Sellers are making a move to the downside. Right. We're at 22 cents in profit. Right. Buyers are currently resisting. Sellers make a big push to the downside. Right. Buyers start to go on the defense again. We have 4 more minutes to go in this session. But we want to stick around to see how this trade play out. Right, so buyers start to make a move, but we have a bear engulfing candle, which is a signal that strong sell pressure is coming in the market. Buyers try to retest the area. Sellers are now resisting. Right. Buyers got rejected. Buyers try to retest again. Right. Buyers make a move to the upside. Sellers are resisting. Right. We're at now 29 cents in profit. 3 minutes to go before the end of this session. Buyers make a run to the upside. Right. Buyers make a move to the upside. Sellers are resisting. Sellers are resisting. Oh no. Oh, sellers make a big rejection to the downside. Wow. So it's a war between buyers and sellers right here. Big war waging. Buyers rebound again with a next attempt to overpower the sellers. Sellers will have none of it. Sellers are resisting. Buyers make a next attempt. Sellers are resisting. Sellers are resisting. Buyers make a next attempt again with a trust. Indecision candle. Me in the market might continue in the direction that it is going. Buyers make a up move. Sellers are resisting. Sellers are resisting. It's almost time to go. Oh, buyers make a move to the upside. Buyers make a big run to the upside. Buyers again. Oh, buyers make a big push. Sellers are resisting. Buyers make a move. It's almost time to close the session. Buyers are making a push to the upside. Sellers are resisting. Big move by the buyers. 52 cents in profit. Sellers are, oh, sellers make a big rejection, and it's a war between buyers and sellers. It's a big war. It's a fight. Oh, yes. We win. We won. Buyers came out on top, and that's it for today, guys. Hope you enjoyed this video. Right, hope you enjoy. Please click the like button. Subscribe. Right, we have more excitement tomorrow. Excitement to come tomorrow. Share this video.